All right, here we are. So let's take a look at Wednesday. Now, as you can see, markets going up. We talked about this level yesterday, so there's no surprise. I said at the swing hours, you can be pushing up there as it stands there. And we had a target of LCL1, which was 2,670 yesterday. As you can see, that has been done in Asia now. So this worked out good. If you waited for New York, you should have been also good. I talked about market sweeping stops. Pretty much that's what it did here, a sweep and then coming back and going back up again. So London just swept Asia. New York bounced off from London, and that was exactly at the trading hour, and then the market pushed up, going further into that zone. I said this was going to be a bit strong zone. The market did come here, as you can see, but the PSD target is 2,670, and it just did that. So if you took profit here as well, you should have been just fine. So, like I said, we're going up, so not much to talk about here. 84, as you know, is on the radar, which we talked about, 2,775, and I don't recall putting that up there because it was too far out. Okay, it is a bit too far out, so we'll I'll put it in there. Okay, 2,775. So on the weekly, we can target that. Okay, so that's obviously going to be ups and downs. So any pullback again is good to go long. Where can you go long? You can go long on the daily or down here. If you take a look at the daily, this is already done. So the first resistance in front of us is going to be that 2,679, which is today's resistance and target actually for today. Okay, remember we're going with the daily as well. So this has got room to go up. So if you want to keep buying, you can. And this is what we were talking about yesterday. It either needed to come back down here. I can get rid of this now. It either needed to come back down here, or I said, at the trading hours, this is okay to go long. Okay, and that was like pretty much it. So market going up from here. If we pull back again, the daily pivot is good to go up, and the place where the market broke out yesterday is there. As you can see, there's a slight gap there. So if the market does come back into this zone, it is also, I guess, just there. Basically, you can just use this here. Look. Okay. This zone is also okay to go long if it does come back down into a swing hour. If it doesn't, anywhere along, I guess, the opening closing is also okay. I've also put the swing hours there. Now we're going to have a bit of volatility in New York. The opening should have some, but today is a good day. Today is a good day to trade. So if you're trading the euro dollar indices, like today is a good day to be trading. Okay, this Wednesday. So if you made use of that, great. So for Wednesday, what can you do? If the market is at these levels, this could like push it back down a little bit, because as you can see, we've been going up for like pretty much 1, 2, 3, 4 days. Okay, which is fine, which is what we're expecting. Keep pushing up and up and up all the way into there. But like I said, this is the weekly, so we're going to wave. Any pullback into a swing hour, I say, is fair game to keep pushing up. This is the good buy. You see, it's already done it, but there's another level here. So if it does come back down into this lower zone, if you want to go up, it's doable. Then you need to target 2,679. Obviously 2,670 as well. But why? Because they sold off there. But that it should keep pushing up, okay, because the trend is up. So with gold, pullbacks, good to go long. Euro dollar. Okay, so this is it, right? Market comes back. Let's take a look. That's your swing hours. So this was a sell zone yesterday. If you sold there, it wasn't a wrong thing to do. You should have been okay. And then once again, look, this is a swing hour as well. So you needed to be careful here because then the market broke out. And once it breaks out, that's it. Remember, we had this zone from the day before. And obviously that is now resistance right there. So if you're using your PST indicator, you can see where to target pretty clearly. And on the weekly, yeah, we've still got room to go up. And remember, this week they bought on the weekly PST, so it's pretty full on. Okay, there's obviously some gaps to fill here, liquidity. So coming back into 1165 zone is on the cards. This is a resistance zone. It's on the daily. On the weekly, we don't have anything. On the weekly, it's just on the price. Okay, so the market still has potential to go. As you can see, not a lot of selling action there, and this could break out. If it breaks out, it's good to go up. If you want to sell there as well, okay, if you want to sell there as well, I don't blame you. I do it with a smaller lot size because that's a PST level. 65 is 1198. Let's do this. And that's exactly what, wow, it is spot on, guys. As you can see, this is 1198. It is spot on 1198. That's just amazing how that PST level just always works. It's just like magic. All right, so that's touching it there, and that's fine. So selling at swing hours from here is okay, but if it breaks out, don't stand in front of it. As you know, why? Because once it breaks out, we've got room to go up. Okay, and that's what we need to be careful for. All right, 1264 there. All right, but selling down into the daily pivot is an option here. Why? Because let's just move this here. That's your breakout zone. So probably coming back here and then bouncing off is also okay. All right, even the weekly pivot is good. So if the market comes down, you can buy from the high here. You can sell as well, but just remember, this is a, this is pushy. But selling here, I think, is okay. At the end of the day, they sold heavy before. You can do it with a smaller lot size if you like, or simply just, go for it. Let's take a look at SB 500. Here's the weekly as usual. We say we're breaking upwards, so buying yesterday the lows would have been okay. That's a nice level. As you can see, the market bought right there, and also that would have been your 8. Yesterday, what did I say? 7:30. That's 7:50. Yeah, 7:30 to 8 o'clock, and then 9:30. That's your 8:30, and then and this is your 9:30 right on the dot there. Okay, so it's pretty much all good. And yesterday too, if I take a look, yesterday was the 24th. Okay, so yeah, we had 7:30 to 7:55 as well. That is just spot on. Okay, 7:30. 7:55 is there. That's your 8 o'clock bar, and then comes all the way back to the opening on the swing hour, going back up again. So as you can see, it's all good. And this is your PST level right on the swing hour in London. PST coming down, retesting swing hour, selling off, PST again, selling off. Okay, so what to do now? Now on the daily, this is not a bad place for the market. As you can see, we've got a divergence happening there. Okay, so can we keep pushing down? there is a breakout here. So 59.5628, we already marked in 5628, which is there. That is just fair bit down. So let's do this. First target is 65, which is 5,711. So 5,711 is there. Okay, you need to be just slightly lower. Well, keep, okay, 5,711. Okay, there's a gap here, so this zone is okay to go long if it comes back, but it's just sweep stops so far. If you want to buy, you got to buy from here, or if there's a stop sweep, or from here at the hour. Remember, the important thing is the hour, right? So the market comes down into an hour, it's a level from before, then you can bang it, okay? And that's the whole idea. So if our bias is to the upside, which it is because of the weekly breakout, then the pullbacks are a buy opportunity for you. Okay, if you want to sell and take a risk, that's your call. But I always say, go with the flow. If the PSD is breaking out, don't stand in front of it. Okay, it's as easy as that. So once again, pulling back to push up is okay. Just don't buy at the tops here, because you're right at a resistance level there. 76 is 5824. So that becomes a possible target, 5824. But that's too far out. So if you do buy, you need to cover the trade, manage the trade, and then push it up into where? Into there, or 5751. Okay, you got to mark 5750. So 5750 should be on our radar as well, which is right there. Okay, let's take a look at Dow Jones. It's going to be same kind of setup, okay, as with all indices. Nicely on the targets, beautiful on the targets. Weekly, we're still breaking out. This is nice. See how it's crouching right on the line, okay? So, and that's there too. This is why PST is really, really helpful. It just gives you the bias. So then you know what to focus on. Now, because it's a daily resistance, okay, we still want to go up, but we don't want to be mucking around here. So a quick dip down, 42,079. 42,079 is here. Okay, that's a quick dip down. It's already pretty close to it. Or a big dip down is also an option. 41,182. 41,182 is too far down. We'll see how things go. Okay, this is how we can manage it, right? Currently, we are up for a retracement. So this should kind of give us a retracement, right? Following it into here, 41,730, or that 54 level is 41,606. Okay, so pushing it down a little bit, 41,606, maybe, yeah, 41,606, around there. Okay, so that's not a bad thing here, 54. Okay, so that's definitely doable, and it could like do a dip down. The other thing is this line here. All right, so just take mental note of it. There's always going to be more than one level. Okay, this is why we got the timing. So if it does come down here and it matches your timing, then you're like, okay, it's time to buy. Okay, and then a bit of technical analysis obviously goes a long way with your timing. So then you can just take this bar, okay, into account. Okay, and that's the wick. Obviously take the wick into the account, and it doesn't matter if it's a big bar as well. The reason I say that is because we've got timing, right? We're not just diving in like some people to do with demand and supply, and they dive in right on the edge and put a stop loss there. We don't need to do that. This could be big, it could be tight, it doesn't matter. We're waiting for the hour. So it comes into here and it matches the zone. Then I've got the hour, and then I'm going with the flow. Ideally, in any case, okay, the ideal conservative option is this. The body of the candle comes into the body of the candle, then you put the stop loss below the wick. Okay, but because we're doing timing, it doesn't really matter. Also, just be mindful of the gap. As I always say, mind the gap. Okay, so this is pretty much minded. This is a big candle wick, and because it's a big candle wick, I will do that. Okay, let's take a look at NASDAQ. Right, so indices might be just, coming back for a bit of a retracement, which is fine. Now, once again, PST levels, targets done, no problemo. Remember, we're looking for a breakout here to push up. So I did say the market should push up, and it is pushing up. Okay, it's nice and easy. I also said be careful for these even highs. We might have a sweep. Okay, which is fine. Now, going long again, if you want to go long, this LCL1 line 19788 is not a bad idea. 19788 is going to be somewhere around here. Okay, so if we dip down, there you go, close the gap, and maybe even stop sweep, come to the weekly pivot. It's also, possible, it's doable. So just match it to your hours, and then we can go long again, because you want to push it into here to close that gap, and then this is your manipulation bar afterwards. You can just push this. You can see I've put this here ages ago. Okay, and that's how it is. All right, so another place to buy is going to be your 53, 19561. Okay, 19561 is going to be there. Whoops. Well, anyway, here. Okay, so somewhere there. So the pullback is okay to go back up again. Like I said, the market might do a bit of a push back down in order to kind of like, because it's been going up so much, in order to get some momentum to push up. This 66 is 19951. 19951, which, as you can see, pretty much done. Okay, so market's broken above it, so buying to go up is okay. Mind the gap here. I think buying is okay. If it breaks out and then comes back down into a swing hour, going back up again is okay. Bitcoin, with Bitcoin as well, I said if the weekly breaks, don't stand in front of it, go with that flow. If you did so, you should be fine, because remember, we said we've got room to go up. Okay, now I do say buy on a pullback. If you did so, well done. Yesterday, did we have a 530? We had a 520. Well, this is your 520, and this is your 530 opening, so that is pretty damn good. Okay, and then we had 730. If you've missed that one, that's your 730 right there, again giving you an opportunity to go up. Doing the targets, it's all nice and easy, and bang bang. All right, what else you can do with this one? This is a zone where they sold off before. Yesterday I also said, guys, be careful. This is a sell zone. So if you're going to buy, be smart. Buy somewhere when the market comes back down. Now, because the market went up and then came back down, you're okay to go long. Why? Because the trend is going up, and according to that up movement, this is now a cheaper price. Okay, and then the market's pushing up. Okay, but it's not a good idea if the market is like already taken off and you're buying here to go further up when you are in this supply zone, right? This is where the market kind of like sold off. Okay, so be mindful. Let's see, and that's basically it. All right, so still a bit of room to go up. There's a bit of a gap here, so if the market does pull back into the daily, making a dip into the gap there, and if it's a trading hour and if you want to push it further up, I don't see any reason why you shouldn't, simply because we should still be hanging in towards that target there, okay, which is also that 57 coming into 67,127. I talked about that before. And then we've got 66,950 here as well, 66,943 actually. So 66,943, 67,127, they're on the radar. So the market should push in that direction. And 68,445 is the blue LCL1 line, which is also logical to target. If it keeps pushing up, you can move your stop forward with it.